The S&P 500 and the Nasdaq 100 as we're talking about here on the day. Now, a few things that we've been watching, a few levels to keep you in mind. Also, a lot of these are on Twitter as well, so make sure you check it out. The link is down below. So what are we looking at? Now, on the Nasdaq in particular, the major level 14.6. Now, I want to give you a visual too on Twitter just so you can see, because I posted this for everyone to see. Earlier, it was there. So you had the zoomed out, and I showed you the bear flag at 14.6, right? So you ended up flagging at that level when you go down to the 2 hour, flagging there, pushing back into a roughly 14.6 here in the middle of the day to get like the 15-minute. You flag there, we break back down. We're sitting on top of that next key level mentioned. Now, showing you where that next key level is, you zoom out, you can see it's the highs we had last August 22, right? Boom, we're right there to the tick. Now, if this level breaks, I think we're in a lot of danger, right? Personally, you don't look good as we speak. In the after hours, no buenos, no nachos, very bad behavior. Now we go into ES, we look at what's happening here. Now you can see relative here on ES, most of those levels have already been destroyed, right? The major level we were watching was kind of back here, locally, 43.3, 43.20 roughly, right? But we're breaking back into the 4,200 range. Now, if we go to SPY and you can look at that level, it's coming into this February's highs or the banking crisis. Was it the banking crisis? But this was like the Fed meeting we had in February, right? So that's where we were. And then banking crisis levels dipped down there. So if we zoom in a little bit, as you can see here as well, this is what we were watching. We go to the 15-minute. You can see a few things. Intraday, what we're looking to be bearish, right? You zoom out, it was your previous lows we had in October 3rd. We broke below that, and then we also broke below the 200 SMA. Also very bearish there, breaking below both of those, very, very weak. And then to end the day, look at where we're at. We are clearly bear flagging at the end of the day here, right? Boom, boom, boom. Not good. We have some earnings, but ultimately there's a few things we have to discuss. That can make a pretty big difference and ultimately make you a lot of money over the next few days if this plays out right. Now, before we go into that, that's you do two things. Consider liking and subscribing. It helps out tons. I appreciate all the support. If you tune in every single day, Monday through Friday, thank you a lot. Appreciate it. Now, obviously, too, Discord, I never want to push this on anybody, but the link is down below if you're interested to see how we trade, why we trade, getting in, getting out, etc., and understanding what makes good setups, right? Now, I would not take this as a signal service. We do post trade ideas all throughout the day, all types of setups. But again, this is definitely something where you're going to have to put effort in order to get the results if that's what you're looking for. Okay. Now, also too, when you look at my chart, you can see all these key levels. And before we go any further, I want to give a special shout out to the sponsor of this video and a new sponsor of the channel, Chart Prime. But what if I could tell you now we have something in a tool that's going to be able to give you all of our key levels or a little bit of a cheat sheet going into these as well. And then also breaking down massive levels you need to be watching for buyers and sellers in between the charts. Or what if you can also go into your chart, quickly identify the patterns that are there, whether it be broadening wedges, head and shoulders, double tops, or anything along those lines. And one thing that you guys know is that I'm never going to stand behind a product that I wouldn't use myself. That's why every single day I am officially going to be using Chart Prime and these specific indicators to help us on the live streams and in the daily videos to make charting quicker, faster, and of course giving us advantage to see things that we may have missed that AI will no longer be missing. And this is just one chart. If you're interested, the link will be down below, and if you use our code, you'll get 30% off every single month. Make sure you check them out. And if you have questions, feel free to comment down below. Let's get back to the video. So a few things I do want to discuss here first. Number one, SPY, you're down around 1.4% on the day. QQQ, Nasdaq, and it's going to give you the same answer on futures, just to let you know, down around 2.5% on the day. Pretty bad. Now, you will see that Dow actually was doing well on the day, but it ended up down 0.3%. We'll get to that here in a second. So a few things I want to discuss. Beginning of the day, obviously red, we kind of gap and then continue pushing down. We get below the 200 SMA, not good. But you start to bounce around 9 o'clock, 30, 40 minutes of market open, you start bouncing back into a little bit, almost into the 200 SMA. The level mentioned on Chart Prime clearly told us it was a big level. You rejected, and the rest was history. Now, what I want to highlight here, though, is even though you were bouncing on SPY, and this was something I was talking heavily about in Discord, when you go to Qs, you didn't really bounce, right? You have a little bit of a flag here, but you only moved up around $1, give or take. I think the SPY bounced almost like 2, almost 3. So from 419 back into almost, 421.5. So a better bounce there in comparison. Now, the thing that we saw across the board though today, and that showed us a lot of the weakness, was something like Microsoft. And this is why I think Meta is not helping. So this morning, Microsoft obviously gapped up, great earnings, and then pushed back down. Now, the key level that we had mentioned here was 341. And even though, right, Microsoft was one of the best performers, right? Should have been one of the strongest stocks coming into the day. Very similar to something like Netflix, right? Even with the bounce, Microsoft continued down throughout that bounce with the remaining areas of tech besides Apple, right? So Tesla got a little bit of a bounce, but ultimately came back down. Amazon, no signs of a bounce all day. Meta, all day long, downside. So you see, even though you're bouncing on indexes, quote unquote, you still didn't really get a bounce on tech. Now, where a majority of the area of the bounce came from was something like XLV, right? Which is therapeutics, healthcare, bouncing, XLI, industrials, bouncing, and then came back down, obviously. I want to highlight something here so you can implement this into your trading, hopefully. When we're looking to see a bounce or we're looking to see, a reversal potentially or buyers to show up in an area, typically for me that revolves around tech, especially this year. Because tech, the Magnificent Seven, whatever you want to call it, FANG, I don't care, right? It's done most of the heavy lifting. Just a reality of the situation. It's done most of the lifting. And when we see tech get continuation or show strength, it's really signified better bounces, more continuation, etc. When we see names like Dow or energy get a bounce, I don't believe that is going to carry the market. It hasn't been able to carry the market all year. Tech, again, has done all that lifting going all the way back into January. So keep that on your radar. So if you're looking at bounces on SPY, make sure you're identifying what's happening with the heat map, Apple, Microsoft, Meta, Amazon, Tesla, NVIDIA, semiconductors as a whole. Right? You need to keep going down that list to understand and identify, right? And that's something that you have to be able to watch. Okay, so make sure you understand that there. Now, number two, we did have the DXY in oil. The DXY continued to bounce. And this is something I kept mentioning. So when we look at the DXY and we zoom in here, right? We've gone through our significant levels. Really, the key levels right here are 105.8. You've lost it multiple times, right? But you're not getting key holds on the daily chart, right? And you're always just bouncing and buyers are showing up here. So the dollar's been a little bit tricky to track and to follow. So you've really been range bound in between 107.2, 105.8 roughly. That's been your kind of local range. On oil, it's been back and forth. You came back down into our support. I mentioned this today on Twitter as well. You bounced out of support at 82, which is the primary level, and you're kind of just back in this bit of a range, right? Other things to identify. So it's hard to jump to conclusions in the short term around the dollar unless we get big holds on daily timeframes. The same thing can be said for mounting and holding below the 200 SMA on SPY, right? We need to see multiple days under the 200 SMA to get conviction. Okay. Now, again, similar to what we saw back here, we've seen days to where we get like some, a few days above this, but we're not confirmed underneath it, right? We need clear rejection. I've gone over yesterday how big these drops were on SPY when you got rejected under the 200 SMA multiple times. So again, we're right back at this level and things could start really getting interesting over the next few days. Okay. So you need to be paying close attention. Also, too, VIX is back above 20. You want to see VIX above 24 to get pretty scared in the market, to say the least, right? But still at 20 is big, but we want to see a better hold here. We saw one hold and push back down. We need more confirmation there. Last up, I do want to talk about IWM. Again, I don't know why more people aren't discussing IWM. I don't know why. This is like the number one thing I'm stuck on, right? IWM is back at 2022 lows, essentially, right? Your low is like 162.7. Now, the fact that you're pushing down here, this is brutal. This is bad. Very, very bad. Okay. IWM has been one of the best metrics for risk on versus risk off. When we were trading to the upside in January, when we were trading to the upside back here in June and July, IWM mounting the 200 was one of the best indicators. Now, the fact that you're obviously below that level, you've lost 170 and you're back at 163, 162. If you lose this, again, I do think sell side in the area of a risk off, you don't want to be risky into small mid caps or even technology to a certain extent, kicks back in. This is very concerning here. Very, very, very concerning. Okay. So if we keep breaking this, I'll have this updated on Twitter as well, but not a good look. So again, a lot of these metrics are coming back to the areas of you got to bounce or it's going to be bad over the next few days and weeks. So again, I'm not saying IWM has to break here, but it's at the area of bounce or die territory. Okay. And again, we're seeing that, the hopeful metric here was, okay, if earnings perform good on tech, it should hold the market up. But that's not the story that we're seeing. Earnings are performing, but the outlook isn't as good as we wanted it to be across the board. And then also, too, names like Microsoft and Meta cannot carry the market alone right now, it seems. Okay. It seems like the stuff in Iran continues to escalate and escalate and escalate. So we'll have to see where that goes as well. Right. So the Nasdaq here, what are we looking at? Okay. Again, what am I specifically looking at? I want to see if we can lose this level of 14.4. You start to lose this, you're bad. Now, the next area I'm looking for, it kind of seems like a matter of time, is a break, retest, and then push into the 200 SMA on the Nasdaq. I think that has to be your target here. Going into Qs, you have a little bit more range to go, about I think it's like 12 points, give or take. So it's hard to say there, but you're very illiquid here. That's the important thing to notice on the Qs. This area, very, very, very illiquid. From 348 down to 339. Very weak. I could see us falling straight through this area into the 200 SMA. So also that lines up here. SPY, again, not what you want to see. The next area, you have a little bit of a chop in this range, but the next big area I'm looking for is 410 to 412. That is your next major level if you remain below 418.3. Okay, that's the 14.3, 14.5. And if you don't hold that, 412, 410 is your next level. Be on the lookout there. Okay, so this should give you a broad viewpoint of the market, what we're looking at, and everything in between. So hope that makes sense. If you have questions on anything I just covered, comment down below. Let me know what you have a question on, and we'll try to get those answers solved as quickly as possible. Now, going into equities, things we were looking at here. NVIDIA, a lot of weakness. Okay, now something that was said in the newsletter, something that's been mentioned in Discord as well. Short-term downside, you had to get below 426. Okay, something that was being said, something that we've been saying, and Jay's been really big on this, okay? Something you need to keep your eyes on here. Now, NVIDIA throughout the day has been making lower highs, okay? So you go to something like the 5 minutes so you can see, and this was a brutal day. So we can see basically going into Tuesday, this was your high, lower high put in today, you broke below lows, and then eventually you broke and retested 426, break, retest, and push down. Check the newsletter for confirmation so you know I'm not lying to you. Now you're pushing back down. Now, obviously, the area you're looking here on NVIDIA is the neckline of 410, 406, roughly. Okay. Again, I've been saying this. People are going to say, Tyler, the head and shoulders, you have to trade it? Do I need a FOMO in? Again, if you're trying to trade the head and shoulders, you are looking for a break and then a retest, or at least shorting the break, right? You're not looking to go short before you break the resistance. This is a major level. 410's been a brick wall. But I will say, okay, Nasdaq losing these levels creates a lot of weakness for semiconductors, okay? Like AVGO today, the same level mentioned from yesterday, okay? What we traded yesterday, the 874 level and region, right? What happens today? You break, you kind of retest, you come back below, retest, and then boom, you just basically fall from the sky. 30 points of downside here, 31 points down on the day, and another 5 in the after hours. So we're seeing all that weakness. Names like Apple, AMD. Again, these names are also, and you're going to notice a big theme. When we look at this, right? The 200 SMA right there, okay? If this starts to break, I mentioned it on Apple. It's a support as long as it doesn't break. But these levels start to break, and it could be bad. AMD, another case of this. You saw nice bounces, but today you start to lose it. You get below 99, and you get one of your biggest drops that you've had as of recent. Almost $5 immediately of downside and another $1 of downside in the after hours. So again, this is a theme that you need to be paying attention to. And this is what I was saying. If 14.6 breaks on Nasdaq, it's bad. That's why I posted this on Twitter so everyone could see. You're bear flagging back into 14.6. Terrible, right? Very, very terrible action that you're seeing. So again, I know everyone thinks, I actually have no idea what everyone thinks. I'm kind of like lost because people like say like, oh, you're losing money during this trading. I'm like, okay, I don't know what to say. 14.6 broke, you got immediate volatility. What we've been saying, if these major levels break, it's going to be immediate. The same thing would have been to the upside, but you didn't get it. 15.4, 14.6. We've been saying 2 levels. If you don't believe me, rewatch the videos over the past week and a half, 2 weeks. Those are levels. Once you break, it's instant volatility. It's going to be instant either, pain or gain, either way. So that's what I'm looking at. That's how I'm trading here. If you have questions, comment down below. I'll have more charts posted on Twitter. Have a good one, traders.